Remember, we're wearing the hat of the accounting department of a company in this test, right? Are we are preparing the financials and we're preparing them in the correct way, right? So we need to do our absolute best to please the investors and the creditors. The full disclosure principle is quite relevant for the notes. We saw this more in our conceptual framework. Full disclosure, we're not going to hide anything. We want to fully disclose and talk about everything. So two possible problems in the notes for this is that maybe it costs too much money to talk about something to get the proper value. Now, there's a balancing act there, and maybe it costs too much money to hire someone to value your asset because that would just not be worth it. Like maybe you think the asset's worth 20 grand and it costs 20 grand to hire someone to value the asset. That might just not be worth it then. So that I'm not giving you a right answer. I'm not saying like you should do it or should not do it, but that's just a possible problem. And then information overload. This is why we don't talk about every single little transaction, every single little piece of fraud, because then it would just be no one would read it, right? It's like Congress. They issue a 1,000,000-page document so that no one reads it, so they can pass whatever bills they want. That's how it works. But as companies, we're held to a higher standard.